AI and robotics will eliminate many of today's jobs of humans. To prevent the economy and the society from collapsing, we will have to help people earn an income without working in the traditional sense. But how on earth are we going to finance that? In this episode, I will give you my answer in the form of a master plan.
What I presented in previous episodes.
This is the third part of my series on income in a world dominated by AI and robots. In the first part, I presented 3 scenarios of what could happen if AI and robots take over most of today's work. Number 1 was a horror scenario in which everything collapses. When so many jobs disappear, people lose their income. They buy less, companies collapse, and so does the state because it loses tax revenue. Number 2 was an abundance scenario, in which we succeeded to ensure that virtually everyone benefits from the enormous increase in productivity brought about by AI and robots, and the quality of life improves significantly for everyone worldwide. And number 3 was a crisis scenario that lies somewhere in between. In the second part, I presented a master plan with more than a dozen strategies for making the abundance scenario a reality, by providing people with income without them having to work in the traditional way, above all through a negative income tax and the accumulation of ownership of productive assets, especially in future-proof companies. You can find the links to parts 1 and 2 in the description. In this third part, I will present a master plan for where all the money is supposed to come from.
Principles. What we need to make sure.
Right at the start, I want to set out a few principles that explain my and our view of my team at the Future Management Group. First principle, the solution must benefit as many people as possible, not just a few, obviously. Second principle, the solution must be as simple as possible. Third principle, the solution must be sustainable, which means it must be viable in the long term, not just convenient in the short term. And fourth principle, it follows from the first 3. The solution should involve as much private freedom as possible and just as little government action as necessary. Everyone can easily agree with principles 1, 2, and 3, but many people see principle 4 differently and think that government should play a big role. In my view, this is categorically wrong. The state has never been a good entrepreneur and will never be, and the state is not a good implementer. Administrations grow faster than what they administrate, virtually always. They subsidize nonsensical things like hydrogen vehicles. State-run organizations are always far more inefficient than businesses. And I'm not talking about huge corporations with employed managers who don't really bear any personal risk. I mean real private owner-led companies who take on huge risks. They go bankrupt when they're not financially sustainable. The state, however, can just keep on borrowing at the expense of future generations. Let's look at how we could implement the transformation to an AI and robotics economy. I'm presenting from a European perspective, but you can apply it everywhere with minor adjustments. The master plan. In part 2, I presented all kinds of ways to make up for losses of jobs and income. Like work, self-employment, and entrepreneurship, I presented viable options. Reducing work time with full compensation. For that, productivity needs to be increased first, not the other way around. Then employers can bear the additional cost. Otherwise, the state needs to pay transfers, which I will address later. Income for socially useful work. We can help finance work with funds for public welfare work, which in turn could be financed by wealthy individuals in exchange for tax savings. I'm presenting this in light blue because it would be an artificially created market, and there is a high risk that this would be inefficient and that they would compete with and thus do harm to real businesses. More self-employed people and entrepreneurs. Private or public funds for startups or self-employed people and companies could also be financed by wealthy individuals or organizations in return for tax savings. The same tax savings should apply when investing directly in new companies. I'm painting this in slightly darker blue because it's rather real investment than the fund for public welfare work. Is that risky? Yes, of course it's risky. It's exactly this fear of risk that has brought us to the mess that we have in most countries in Europe. Because we want to rule out every conceivable risk, because we want to protect citizens from even the smallest risks, we're taking the biggest risk with that: to fail. Namely, we hinder every advance in every innovation. We need to take more risk again in order to create more prosperity. Anything else is just a pipe dream. Under no circumstances should we solve these problems or try to solve these problems with government employment agencies or government contracts. See principle number 4. The state is not a good entrepreneur. That's why it's dark red. The best category of solutions is ownership of assets, ownership of productive assets. Direct investments in AI and robotics. When a person loses their job to robots and AI, the ideal investment would be to help them invest directly in those robots and those AIs or self-driving trucks. That way, they could immediately begin to earn income. The investment can be organized in various forms. Investments in companies. Holding shares in many future-proof companies, mainly through ETFs, is the best long-term systemic solution for an affluent society. It's like retiring very early. Investments in real assets. Direct investments in real estate, infrastructure, or energy are usually less profitable than investments in companies, but they bear less risk, at least mostly. Here too, building substantial wealth takes a much longer time than with direct investments in operative AI and robots. For all three kinds of income, we can build funds to finance the respective investments. Ideally, private funds, if necessary, facilitated by the state. Wealthy individuals and also the treasury of organizations can invest in the funds in return for tax relief. In both cases, investing in companies for major capital gains, unfortunately, often takes decades. It is a long time before people can live off the dividends. The state will have to provide additional support until further notice. Transfer payments and benefits. In episode 2, I proposed a number of solutions to provide people with income in the form of transfers, which simply means to give people money without them really working. Such transfers will be necessary as long as not all people are wealthy enough to live off the dividends of their investments. Financing those transfers is challenging. We need to see increased productivity to generate sufficient funds. There are several ways for financing those transfers. Those cash gifts to citizens can be financed in part by government reducing its spending. Yes, this has rarely worked in the past, but we are talking about the greatest economic transformation in centuries. If we fail, we will end up in a catastrophe. The usual self-interest must not play a role here, but in reality, of course, they will. Radical elimination of subsidies. The European Union and the United States maintain a complex system of subsidies. These must be applied for, reviewed, paid out, administered, and monitored. There are thousands of different subsidies. The fact that it is actually impossible to find an exact number of funds and programs says it all. In an AI and robotics economy, citizens must be subsidized directly, if at all. Everything else should be scrapped. Subsidies assume that politicians know better what the economy and what people need. This is virtually never true. For example, many states promote hydrogen for mobility and energy, which defies all logic of physics and economics. It is the result of lobbying for dying industries. Furthermore, many subsidies go to large corporations who really do not need them. Radical simplification of public administration. Public administration is hugely complex and inefficient, always and everywhere. A striking example are social welfare systems. An unimaginable amount of effort is spent on administering the many social welfare funds determining who is in need and managing the funds. Only a small portion of this goes toward the actual task at hand. The majority is spent for administration. This is a quote from Per Steinbrück, a German politician. A single mother who has a father in need of care is entitled to 12 social benefits from 5 different ministries based on 4 different income definitions from 8 different approval agencies. That says it all. All of this could be completely abolished with a simple solution: a negative income tax. Let me repeat. The administration of a negative income tax would cost almost nothing, since all data and all processes and all laws are already there. It can be fully automated. The entire social welfare administration could be eliminated. Billions spent on applications, checks, calculations, and so on could be put to better use. But so far, no one dares to tackle this radical simplification. But this will have to change. All of this shows once again how irrational and inefficient states are often organized. What is reasonable is not done because there are too many who benefit from the irrationality and the inefficiency. Total digitalization and intelligentization. Once we have simplified, we can automate, digitalize, and intelligentize, so use AI. It's hard to believe. In the last 10 years, many German ministries, for example, have grown by over 50% in the number of employees. 50% in 10 years. Essentially, this is self-created work, with no tangible benefits for citizens, if it's work at all. The staffing levels that were sufficient in 2015 would, for sure, still be sufficient today. That would be a reduction by 1/3 to the 2015 level. If we were to radically digitalize public administration, another third could easily be saved. Estonia is a role model for digitalization. Yes, it's a small country, but it's not impossible to truly digitize and intelligentize a large country. The patchwork of IT systems alone is incomprehensible. Even a large country could be managed using a single uniform cloud software, with even better data protection than today. Then we as citizens would not have to repeatedly enter the same data and provide proof in different places. The wealth tax. Taxes on very large fortunes are a popular demand. On closer inspection, however, they are not an effective solution. First of all, this would mean taxing money that has already been taxed, which is questionable on ethical grounds. Without entrepreneurial initiative, this wealth would not exist in the first place, nor would the jobs. Entrepreneurial initiative and risk must be rewarded. Building a business is an enormous effort, especially mentally. The economy is not a zero-sum game, in which one person's gain must be another's loss. Those who are suspicious of high incomes and great wealth among top performers cannot even conceive of a sustainable solution. No, the economy, again, is not a zero-sum game. The pie is getting bigger and bigger, and even a small piece of the bigger pie allows for a much better quality of life than in the past. The size of the economy is dynamic. It is growing. That's the pie. That's why the prosperity of almost everyone in the world has continued to increase substantially in the real world. Those who have created their wealth themselves have not taken it away from anyone else. Marx's theory that entrepreneurs pocket the added value generated by their employees would only hold true if entrepreneurs no longer had any function. No more founding and expanding the company, no more developing and successfully implementing strategies, no innovation, acquiring customers, performing management tasks, and so on. And only if employees had no choice but to work just in this company. But none of this is the case. Mind you, the wealth of the super rich is drastically overestimated as a source of money, usually for ideological reasons or simply out of envy. Even if you took all the money away from all billionaires, it wouldn't last long, just a couple of months. And without global agreement on wealth taxes, the capital would simply flee abroad. A global wealth tax is highly unlikely. It would be more helpful than a wealth tax if the super rich directly supported the less wealthy in building up their assets, their ownership directly, as I suggested earlier, voluntarily, in return for tax savings, then nothing would be lost in the administration of the wealth tax. Higher taxes on large inheritances. Much the same applies to higher inheritance taxes on large estates. However, we could argue that the heirs did not earn their wealth themselves and should therefore contribute a larger portion of it to building up the wealth of the less fortunate. This would create more equal opportunities. We really need to help people across the board to build ownership of productive assets. Otherwise, when everything goes wrong, the heirs will not be able to enjoy their unearned wealth for long. That is why I consider it to be feasible and mark it in light blue. A financial transaction tax. A tax on financial transactions would be popular. In fact, the financial sector has now become largely detached from the real economy. The abstract volume of money flows is many times greater than the real volume of the physical economy. And this is not without risk. However, experience with a financial transaction tax in France, Italy, Belgium, the UK, and Sweden has not been promising. Sweden has abolished it. A global agreement is pretty unlikely, and not even the European Union can agree on it after years of discussion. In principle, a financial transaction tax to finance transfers makes perfect sense, but it is difficult to implement, therefore only in light blue. Higher tax on capital gains. In all major economies, capital gains are taxed at significantly lower rates than income from work. In China and Switzerland, private capital gains are even largely tax-free. In addition, in most countries, income from work is subject to very high social security contributions. Capital gains, on the other hand, are not subject to such contributions. Yes, the aim is to promote investment through tax advantages for capital gains. That's why the taxes are lower. Nevertheless, in an automated world, it is no longer fair that capital owners who do not work pay so much less tax and social security contributions than people who have to sell their labor and maybe do not have the job anymore. It should be equally taxed, which would also simplify the tax system. I'm an investor myself, but we have to see the bigger picture without self-interest. State-run companies. Principle 4 prohibits state holdings in companies as a matter of principle. It is not the state's job to run companies, nor is it its strength. On the contrary. Debt and money printing. I've marked government debt used to finance transfer payments in dark red. Firstly, because most countries are already heavily indebted, and, more importantly, because it would be debt for consumption. This contradicts Principle 4. It is not sustainable. It only shifts the problem into the future, makes them even worse, and is absolutely not a sustainable solution. In the long term, it leads to financial disaster. This applies even more so to money creation by the government, commonly referred to as money printing. The more money the government creates and spends, the faster and more severely it destroys the economy and the society. So absolutely dark red. AI and robot tax. The old idea of a machine tax is often proposed for funding of transfers. But if there is to be a machine tax, which we would now have to call AI and robot tax, then there would have also had to be a steam engine tax, or a car tax, a computer tax, and a software tax. Anyone who implements SAP should have to pay taxes on it because jobs are being eliminated. So we are taxing innovation and progress. Not a good idea. In addition, an AI and robot tax would put companies at a competitive disadvantage if competitors in other countries do not have to pay such taxes. And it is extremely unlikely that all countries would agree on this. I will show you a better option in a moment. So, red category for the AI and robot tax in its pure form. Higher corporate income taxes. Let's take once more a look at the big picture. What will happen? AI and robots will take over a large part of cognitive and physical human work at a much lower cost. Who will use AI and robots? Companies, of course. they will become significantly more productive. They will generate significantly more revenue and profits. If, big if, customers have the money to buy their products. The big problem is that many people will lose their jobs in virtually all companies. So, what's the obvious solution? I see the most suitable source of funding of the transfers in higher corporate income taxes. And I say this as someone who's been an entrepreneur all of my life. Ideally, the total amount of salaries paid would be taken into account so that companies who still employ a lot of people would pay less taxes than those that are fully automated. And as I said, the best solution would be for people to have stakes in such companies, to own such companies. However, since this cannot happen overnight, higher income taxes for businesses can address the cause and effect precisely. This source of funding for transfers is also pretty elegant and simple because a company's profit already has to be documented with utmost accuracy in the books. Then all that remains is to ensure that the few percent of international companies no longer can reduce their tax burden to minimal amounts. It's either a different definition of taxable profit or a global minimum tax that might be a solution, on which good progress is already being made. Price effects. How should the massive price reductions be financed? Quite simply, this happens automatically as companies are in competition with each other, and with lower costs through AI and robots, there will be a pressure to reduce prices so they generate lower revenues. That's the source. There will be massive deflation of almost all goods and services. There is no need to actively address this issue.
The conclusion.
Look at the master plan. Yes, it is complicated and complex, but so is the issue. This is a space of possibilities, a range of solutions. The darker green, the new types of income on the left-hand side are, and the darker blue, the implementation and financing strategies are, the more effective and meaningful they are. Some are effective quickly, such as a basic income as a negative income tax, while others only have a long-term effect, such as building up ownership of productive assets for as many people as possible. Each country will choose its own mix. Some governments will do it more intelligently, with more foresight, and others less intelligently, more ideologically clouded, and thus more short-sighted. The condition of our world is that way because people's brains are the way they are. We are facing the greatest and fastest transformation of our lives and our work ever. We have a lot to look forward to. We will, at the end, live in an abundance world. But the master plan shows we are not lost in an AI and robot economy and do not have to end up in a horror scenario of economic catastrophe. Quite the contrary. It will not be easy, but we have enough options and opportunities to make the transition to a healthy and prosperous society with quality of life that is unimaginable today, if we act in a timely and future-intelligent manner. What mix of measures would you choose? Where do you see a need for further reflection and discussion? Write your thoughts in the comments, please. Please share this episode with your friends and family, for too few people are truly aware of this massive coming transformation. If you want to improve the strategy of your company and future-proof it, send me a message. We have been in the business of foresight and strategy for 34 years now. And consider becoming a member of the Bright Future Leaders for free, where we share all free kinds of insights and tools on the future, strategy, innovation, and leadership. You will find the links in the description. Part 1 you will find here, and here is the entire playlist on AI and robotics. Have a bright future.
Become a member of the Bright Future Leaders now and receive free knowledge and methods for your future strategy.